The financial world is changing. Bitcoin, once a niche digital asset, is now attracting mainstream attention. Bitcoin exchange-traded funds, or ETFs, are at the forefront of this revolution. These investment vehicles offer a regulated and accessible way to gain exposure to Bitcoin. Inflows into Bitcoin ETFs have reached record levels, surpassing even gold ETFs. This surge in popularity highlights a shifting investment landscape. Investors are increasingly recognizing the potential of Bitcoin as a store of value and a hedge against inflation. BlackRock, the world's largest asset manager, has played a significant role in this shift. Its Bitcoin ETF, IBIT, has shattered records, becoming the fastest ETF to reach $50 billion in assets. This achievement underscores the growing demand for Bitcoin exposure among institutional and individual investors alike. The success of IBIT is not an isolated phenomenon. Other Bitcoin ETFs from Fidelity, Grayscale, and ARK Invest have also attracted significant investments. These ETFs provide investors with a familiar and trusted way to participate in the Bitcoin market. The rise of Bitcoin ETFs marks a turning point in the evolution of Bitcoin. It signals a growing acceptance of Bitcoin as an investable asset class. As more investors recognize the potential of Bitcoin, we can expect to see continued growth in the Bitcoin ETF market. This growth will further solidify Bitcoin's position within the global financial system. The future of finance is digital, and Bitcoin ETFs are paving the way. Institutional investors, once hesitant, are now embracing Bitcoin. These sophisticated investors, including hedge funds, pension funds, and endowments, manage trillions of dollars in assets. Their entry into the Bitcoin market is a significant development. Data shows that institutional investors now hold a substantial portion of Bitcoin ETF assets. This indicates a growing belief in the long-term potential of Bitcoin. One popular strategy employed by institutional investors is the basis trade. This involves buying spot Bitcoin ETFs while simultaneously shorting Bitcoin futures contracts. The goal is to profit from the price difference between the two markets. This strategy is considered delta neutral, meaning it has minimal impact on the price of Bitcoin itself. The basis trade allows institutional investors to gain exposure to Bitcoin without directly affecting its price volatility. The increasing participation of institutional investors is a positive sign for the Bitcoin market. It brings greater liquidity, stability, and legitimacy to the asset class. As more institutions add Bitcoin to their portfolios, it further cements its place within the mainstream financial system. The involvement of these large players is crucial for the continued growth and maturation of the Bitcoin market. Major wirehouses such as UBS, Morgan Stanley, and Merrill Lynch cater to high-net-worth individuals and manage vast sums of wealth. These institutions have yet to fully embrace Bitcoin ETFs. Currently, clients can request to purchase Bitcoin ETFs through these firms, but advisors are not actively recommending them. This cautious approach is likely due to regulatory uncertainty and the perceived volatility of Bitcoin. However, if these wirehouses were to endorse Bitcoin ETFs, even as a small allocation within a diversified portfolio, the impact could be significant. Millions of clients, many with limited exposure to digital assets, would gain access to Bitcoin through familiar and trusted channels. This could lead to a massive influx of capital into the Bitcoin market. The potential for growth is enormous. Imagine a scenario where wirehouses recommend a 2 to 5% allocation to Bitcoin ETFs across their client base. This would translate into trillions of dollars flowing into the Bitcoin ecosystem. Such a move would undoubtedly propel Bitcoin into the mainstream and solidify its position as a global asset class. The growth potential of Bitcoin ETFs extends far beyond institutional investors and wirehouses. Corporations are increasingly considering adding Bitcoin to their balance sheets as a Treasury reserve asset. MicroStrategy, Tesla, and Square are among the early adopters. As more companies follow suit, we could see the emergence of corporate Bitcoin ETFs. Similarly, nation-states are exploring the potential of Bitcoin as a reserve asset. El Salvador made history by adopting Bitcoin as legal tender. Other countries facing economic instability or seeking to diversify their reserves are closely watching El Salvador's experiment. The adoption of Bitcoin by nations could lead to the creation of sovereign Bitcoin ETFs. The current price of Bitcoin is a reflection of these developments. While past performance is not indicative of future results, the upward trajectory of Bitcoin's price suggests a growing confidence in its long-term potential. As more investors, institutions, corporations, and even nations recognize the value proposition of Bitcoin, we can expect to see continued growth and innovation in the Bitcoin ETF market. The future of finance is being written in code, and Bitcoin ETFs are at the forefront of this revolution.